What's going on, y'all? This is Plainly Bitcoin back with another educational video about cryptocurrency and the Bitcoin market. Trying to show y'all that crypto is the future. Inflation is only getting higher. Inflation is not going away. The debasement of the US dollar is not going away. We need a hedge so the money that we work for today can be worth more in the future. Bitcoin is looking to be that safe haven, that one beacon for hope. Today I'm going to be talking about how it's almost time for the Fed to loosen policy, which means they have to print more money. In 2020, they had to print a lot of money because of we know what happened in 2020. And then, so they had to print a whole bunch of money. And the inflation started going up. And then at the end of 2021, 2022, 2023, they raised interest rates so that they could strengthen the US dollar and bring inflation down. But they can only do that for so long without crashing the economy. The economy is looking weak, so that now it's almost time for them to print money. Let's get into the article, y'all. Looser Fed policy, globe macro trends point to a bullish outlook for Bitcoin. Bitcoin may be decoupling from concerns about a U.S. recession and aligning more closely with the U.S. dollar's performance and signs of easing monetary policy, according to ETC Group. The bearish environment that dominated the crypto markets in early August may have set the conditions for a tactical bottom for Bitcoin, supported by expectations of looser monetary policy in the United States. According to an analyst from asset manager ETC Group, sentiment around crypto assets dropped in August to its lowest point since the FTX collapse in November 2022, driven by rising concerns over a recession in the U.S. and the sudden appreciation of the Japanese yen. Recession fears, however, quickly evolved into expectations of a reversal in the Federal Reserve monetary policy. If the Fed begins easing its policy, meaning lower interest rates or injecting more money into the economy, it could create a more favorable environment for Bitcoin. As a looser monetary policy generally encourages more risk-taking and investment in assets like cryptocurrencies. According to Andre, ETC Group's head of research, we think the combination of the macro and crypto sentiment capitulation in early August most likely marked a significant tactical bottom in Bitcoin and consequently also marked the beginning of a renewed bull run. The anticipation was reinforced when Fed Chair Jerome Powell indicated during a meeting in Jackson Hole, Wyoming, that such a reversal is likely imminent. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balances of risk, said the Fed chair. According to Andre, Powell's comments were an indication that the Fed could no longer tolerate deteriorating labor market conditions and pointed to rate cuts starting in September. Our own market-based measure of monetary policy expectations is now clearly signaling positive expectations for monetary policy. This is bound to provide a positive tailwind for Bitcoin and other crypto assets over the coming month. Bitcoin's price is $58,000 at the time of writing, having dropped nearly 5% over the past 30 days. In 2024, however, the asset still sees a 31% return. Even though interest rates are high, a risk-on asset is still up 31%. Come on, y'all. I'm trying to tell y'all. These are facts. Recession risk. Concerns over an economic slowdown in the U.S. are less likely to affect Bitcoin's price, forecast ETC Group. According to Andre's analysis, the cryptocurrency sensitivity to global growth expectations is decreasing and becoming a more correlated with monetary policy and the performance of the US dollar. Our macro factor model implies that Bitcoin's performance over the past 120 days has been explained less by changes in global wealth expectations and more by other macro factors such as monetary policy expectation, ex, expectations or the US dollar. So everybody is expecting the interest rates to go lower, which is good for investing. It's time for basically another 5-7 years, you guys, of markets going up. Right now is the time to invest. Trying to tell y'all, this is not financial advice, but you should really start looking into investing, because the US dollar inflation is not going away. Inflation is not going away, you guys. Don't believe what they tell you. They're gonna try to, I'm telling you, they're gonna try to give you the illusion that everything is good. The US dollar is good, but it is not. You have to do your own research. You have to go outside the box, think for yourself. You have to gather the facts. The US dollar is not doing good. It's at its end, it's at the end of its run. The US dollar is not backed by anything. That is not good for a fiat currency, you guys. Alright, y'all. So, I'm trying to tell y'all, like I said earlier in the video, interest rates are high right now, and we're still near our all-time highs in the stock market. It's not supposed to be like that. Bitcoin is still at 60,000. When they started these interest rates, when they started raising interest rates, Bitcoin was at 60,000. It was supposed to be down throughout those 2 years, 2.5, 3 years that they was raising interest rates. Usually a risk-on asset would go down, and Bitcoin did go down, but it came right back up. That just lets you know how strong, how much conviction people have in this asset, Bitcoin. I'm telling you guys better take a deeper look, because Bitcoin is going to 100,000. It is going to 150,000. It's not a matter of if, it's a matter of when. Hit the like button, hit the subscribe button, share this video, you guys. Bitcoin is here to stay. Bitcoin can save you. Bitcoin can give you purchasing power for the future. Just get some. Get off zero, you guys. This is not financial advice. This is just for educational purpose. Get off zero. Buy some. The easiest way, the safest way, Coinbase. This is going to do it for this video, y'all. Thank you for listening. I'll see you on the next one. Peace.